Hello everyone. So welcome to my YouTube channel. So today we are doing the fundamental analysis part 1. So in fundamental analysis part 1, we will be covering income statement. So before going ahead with the income statement, I want to state that why fundamental analysis is very important. Well, fundamental analysis is very important in able to understand the financial position of a company. It is not only important for analysts but on the investor point of view also. In order to understand what is the actual position of a company, we need to do fundamental analysis. In fundamental analysis, the three statements are very important. The first statement is the income statement, the second is the balance sheet, and the third is the cash flow statement. So today in this video we will be covering income statement. Please watch the video till the end and I make sure that you will understand any income statement very easily, and after watching this video you will be able to interpret any income statement very easily. So let's get started.
So today we will understand what is income statement analysis. Well, understanding income statement analysis is a very important not only for the internal analyst but also on the point of view of investors. So make sure you watch the video till the end. So let's get started. So first of all, what is income statement? Income statement is a financial statement that showcases profit and loss of a company. In short, it enables us to understand the revenue and expenditure of a company over a period of time. So what you understand by this statement is income statement tells us the profit and loss of a company. How is the revenue of the company? How is the expenses of the company? And whether the company is able to make profit. Now, income statement therefore is also referred as P&L statement, that is profit and loss statement or statement of earning. So if you want to understand income statement in a more simplified manner, income statement enable us to understand the net income, that is revenue minus expenses. Now we will understand the types of income statement. Well, income statement is majorly of two types. First is single step income statement and the second is multi-step income statement. Well, single step income statement, in the style of income statement, all the revenues are grouped together and all expenses are grouped together. Well, you can say or state that single step income statement is represented in a very simplified manner. But the big companies and all the companies prefer multi-step income statement. Well, in multi-step income statement, all the line items are segregated. So, for example, the operating revenue, the operating expenses will be segregated from non-operating revenue and non-operating expenses. So here we will take the example of multi-step income statement. Now we will learn how to read one income statement. Well, before understanding or reading an income statement, we must understand each and every component of income statement. So the first component and the most important component is the revenue. What is revenue? In a simplified manner, revenue is the total money accrued by the company by selling its goods or services. So basically it involves the core operating activities. The second is the cost of goods sold. Well, cost of goods sold is the direct cost that is involved in manufacturing the products or goods or services. For example, if the company is selling shoes, so the direct cost involved would be the labor, the raw material. So it will come under the cost of goods sold. Remember, it does not include any kind of indirect cost. So the gross profit which we will get is revenue minus cost of goods sold. Now the third line item, that is SG&A expense. Well, it is important we understand the SG&A expense and how it is different from the COGS. So SG&A expense is basically all the non-production expenses. For example, the non-production expenses will include rent, advertisement, marketing, traveling, salaries, bonus, etc. The next line item is depreciation and amortization. It is basically a non-cash expense. So in amortization or depreciation, there is reduction or decline of the value of the assets. In the case of amortization, it includes the intangible assets such as the goodwill of a company. And in case of depreciation, it will be the tangible assets. So you can take the example of plants or factories, etc., etc. So now, if we reduce all these line items with the revenue, we get the operating income. So what is operating income? Operating income is nothing but revenue minus COGS minus SG&A and minus debts. So all other line items after from this depreciation would be the non-operating expenses. Since those are the non-operating expenses, here we will declare this term as the operating income. And operating income is a very important and powerful indicator of a company. By looking at the operating income, we can understand that whether the company is making profit by its core activities. Now the next line item, that is interest expense. Well, what is income expense? Interest expense. So interest expense is nothing but the cost occurred because of borrowed funds by the company. For example, the company may have taken loan from a bank. So the interest which it pays is an interest expense. And it is a type of non-operating expense. Now we will get earning before tax. So what is earning before tax? That is revenue minus COGS minus SG&A minus debts and minus interest expense. Last line item, that is income tax. Well, income tax is the total tax expenses, or you can say the liability that is owned by the government. So if the company is making profit, the government take income tax. As we know, it is also imposed on the individual also. Whenever a profit is earned, income tax is taken. So the net income that belongs to the company is revenue minus COGS minus SG&A minus debts minus interest and minus income tax. So afterwards, we will try to figure it out. We will try to infer one income statement, and I am sure that you will understand now any income statement very easily. Now let's observe that whether we are able to read that income statement. So it is a dummy example of Amazon.com, and here the income statement is mentioned. So here you can see 3 years are mentioned: 2015, 2016 and 2017. So here you can see the total net sales. So it consists of the product sales, the service sales. So the total net sales. Now we will deduct all the operating expenses, the cost of goods sold, SG&A. So here SG&A is marketing, technology, content, general and administrative expenses. So for example, the marketing expense for the year 2015 was 5,254 million US dollar, and in the year 2017 it was 10,069 million US dollar. So like that, after deducting all these line items, we get the total operating expense. So the total operating expense, and after that we will get the operating income. So the total operating income for the year 2015 was 2,233 million US dollar, and in the year 2017 it was 4,106 million US dollar. Now the interest expense has been imposed, and other also non-operating income expense such as the income before income tax, provision for income tax, equity method investment activity. So after deducting all these non-operating expenses, we arrive with the net income. So in the year 2015, the net income was 596 million US dollar, and for the year 2017, it was 3,033 million US dollar. Now here there is mention of basic earning per share and diluted earning per share. In the next video, I will be explaining this two concept. I feel this two concept is very important. So now I hope you can read any income statement very easily, very properly. For any suggestions, do comment me in the comment box.
If you like this video, kindly please like and subscribe to my channel. Take care and meet you in the next video.